Yeah, ladies and gentlemen, a very good morning here from Dubai. I woke up this morning and had quite a surprise. I thought first there was a mistake, but the futures are deeply red. Okay, look here. We have S&P futures 1.6 percent down, Dow futures 2% down. Nasdaq down 1%, Russell 2000 4%, crude oil 4% down. Okay, gold up 1.2%. The 10-year bond down 1.3%, VIX down 4%. While the VIX will go up today later on, obviously with this volatility. But we are encountering a kind of a mini crash, right? Also, the Nikkei down 2.5%. So, as you can see here, all the major indexes also in China are down. And this has two big reasons that start with C, guys, okay, with the letter C. And the one I can tell, this is China want to delist Didi, and the second one is the health issue that we have currently. I don't want to say the word. It starts with the C and end with a D, and there is a new version of it, and emergency meetings are being scheduled right now in the south of Africa. So basically, this is something that is quite interesting to watch. And now, obviously, comes what it have to come, right? We are everything at all-time highs, and there's big bad news, and this gives us a dip. And today we will discuss, should you buy the dip or you are waiting? Okay, so make sure to smash the like button if you like these updates, and we dive directly in. China asked Didi. Didi, as you know, is a big Chinese company, one of those big companies that is a kind of a Uber, but it's basically some kind of China version of it with some other products and services as well. And Chinese regulators have asked Didi Global top executives to devise a plan to delist from US bourses. People familiar with the matter said an unprecedented request that's likely to revive fears about Beijing intentions for its giant tech industry. And we know there was a lot of talks already with China from both sides. Okay, the US said, we might don't want that Chinese companies will be listing on the US marketplaces, and other way around. Now China says, make a plan, Didi, to delist from US platforms. Okay, no more platforms, no more trading of Chinese stocks in US. This is what the Chinese government apparently want. So, China as a government has more power and can directly influence companies. As we know, you remember what happened with Alibaba, right? Jack Ma just said something and he need to hide, right? Because it's too dangerous for him. So, you have this interesting, let's say, movements by governments, geopolitical tensions that can influence the markets very much, and that's why you can see sometimes this kind of crazy moves onto the stock market. So I expect that all of the Chinese companies, Didi, Neo, you will see also BYD, all of those Chinese names that are listed in the US will crash today. Okay, I think this will happen. So the funny thing about it, also the report says that actually Didi or the government want that they will get back the IPO price. Okay, that's quite interesting. So they will get the IPO price here. It's written $14. Let us see where Didi is currently trading at. At $8. Okay, this would be not a bad deal, I think. But let us have a look. So Didi actually, that would be a great deal actually for Didi investors. But I think for other investors, if they get back only the IPO price, that would be a bad deal. Okay. Yeah, let me know in the comments where you are watching from, because this is always very, very interesting, guys. And yeah, and then the second part is actually maybe more serious, okay? So the first part, let the stock exchange lose 0.7 percentage and so on, and now it seems it's dragging even more down. So we shall see how this works out. And here's the reason. So the C is having another version, and there's some meetings that are planned to be done today, and therefore I'm really curious how this will work out. I mean, in the end of the day, it seems something serious because the WHO are meeting like an emergency meeting, so it's definitely something that it should be considered, alarming. However, though, you remember we went through all of these different versions, and as more as you let's say go forward with this, you know that every wave is having a less impact on the economy itself, right? We know how to deal with it. Meanwhile, we can ensure that we go more digital than physical, and so on and so forth. So that's something that might be a great opportunity to purchase. And now I want to conclude the video with something that was said by one of my favorite analysts on the market, Tom Lee. He said on CNBC that he sees a Santa rally, and he actually says something in between where he say, every dip should be used as opportunity to buy, because he sees the S&P 500 maybe even to 5,000 this year as a Santa rally. This is the seasonality as well. So this is quite interesting what will be done. Obviously, this is a brand new information, can turn the tables as well. So let's have a look what he have to say.
Our next guest believes Wall Street is on the cusp of a Santa rally. Let's bring in Fast Money friend Tom Lee. Tom is the managing partner of Fundstrat and a CNBC contributor. Tom, always great to see you.
Yeah, great to see you. Happy Thanksgiving.
Happy Thanksgiving to you. I'll ask you the same question. What are the best trades in your view to year end?
I think interest rates are going to be one of the key pivots, but from an equity perspective, we're entering a seasonally strong period. Powell's renominated. There's a lot of cash on the sidelines. I know there's been a lot of volatility lately that's put a lot of money on the sidelines, and there's been some tax loss selling. So I think we're going to finish quite strongly, but I see this led by not only just cyclicals, but also the FANG complex. So it's almost a FANG plus epicenter rally.
And you're still sticking by your 4,800 to year end, so there's 100 S&P points from where we are right now. Is that right?
Yes, I think probably more correctly, I think we're going to surpass 4,800 into year end. And, part of it is going to be to the extent that some of the things that have scared people, like the European lockdowns, those aren't going to be for 6 weeks. So I think as soon as those lift, we're going to go back into a much stronger risk on environment. So, it could be, it could be a 4,900 number, but I would say 4,800 is probably the base case into year end.
Hey, Tom, it's Tim. Talk about energy and talk about the positioning of institutions and your clients on this trade. Are they going to ever be investors again? And Carter comes on and talks all about how actually it's been a bit of a head fake on energy. We talk a lot about the oil price, but who's really investing here?
I'd say that investors in 2021, like institutional, kind of looked at energy but from a distance, because they thought, okay, this is a small group and it's made a big move, and they figured oil wasn't really going to go anywhere. But as you know, oil's actually now getting to be a very tight market, and I think the White House fired its last bullet in terms of releasing the SPR. So I think oil now has a runway to actually move, towards 100. And as investors think about 2022, I think at the top of the list is exactly what you guys described, that it's a resource energy equity trade because there's structural shortage of oil. It's going to take years for production to fix, but the demand side is going to really rebound, especially as we get through this last of the COVID, and now we get the antiviral pills. I think the COVID situation looks so much better next year. Investors really do want to have more exposure. So we're seeing incremental interest, and you're seeing it in the relative performance.
Hey, Tom, when you look at this time of year, everyone always starts to throw out those biggest surprise trades of the following year. Where do you see rates, and how does that mess up your prognosticating of the year, whether it's energy, whether it's the banks? Everyone expects rates to explode above 2%. But what happens if it doesn't? What happens if they don't? What happens if we see a 10-year that's 1.2, 1.3 for the majority of the year?
Yeah, that's a key battleground, actually, because as you know, at the moment, the bond market is looking for Fed liftoff far more aggressively than the street is, and obviously more aggressive than the Fed. So the big pivot next year is, what if inflation turns out to be a head fake and we actually start to see stable to falling inflation on a lot of goods? That would be a big shock, because you would see, as exactly described, a huge adjustment across the entire curve of yields. But I think it ends up being that yields are lower, and it really elevates equity risk premium, which means the market could go into another gear.
Tom, I want to ask you about Bitcoin, because you've got a big call. You think $100,000 is where it goes in the final weeks of the year. I mean, is Thanksgiving going to be a catalyst? Is this going to be one of these Thanksgivings where people are around the table and they're talking about Ethereum and Bitcoin and NFTs and so on, and that's what helps Bitcoin go higher?
Melissa, that's what happens, around Thanksgiving, is people talk about things that have really either been transforming or life-changing. Crypto is one of those things, because, as you know, like even something like 1 in 5 home down payments is coming from crypto profits. I mean, it's some staggering number for first-time home buyers.
Jeez.
So I think it's like 2017. People come home for Thanksgiving, they talk about crypto. There's only 200 million real wallets, like users of crypto worldwide, out of 7 billion people. So it's still the earliest stages. So I think both institutional and individuals are going to talk a lot about crypto, and I think they're going to conclude 2022 is a great year, and that's what I think really strengthens Bitcoin into year end.
Oh, as you can see, this video is obviously a couple of days old already, on the 25th of November, so yesterday, or day before yesterday. But yeah, it shows you that the overall situation is quite interesting. Okay, we have the seasonality, we have usually stocks go up towards Christmas. However, we have the all-time highs, so this kind of news is just shooting inside this house of cards. Okay, so you can have both, like you can have really like a drag down now on a Friday, or we see a little bit of a recovery and people say, okay, China, okay, what happened? Okay, let's break it down. China stocks, all right, China stocks, there was always a little bit of a risk. And then the new version of the C, we need to wait for the new health update, but we are already in lockdown, so what does it, the lockdown maybe will be a little bit longer, and however, I think that all in all, the lockdowns have less and less impact on the economy. So I think it could be a great opportunity. I'm more tending to the camp of this is a great opportunity to buy, rather than saying, okay, this is now the end of the rally. Okay, because we went through this is something that is new, but nothing like totally new, right? I mean, we fought already those different versions of the C, and that's why I think that this could be a great opportunity to purchase stocks on the cheap today, and maybe also the next day, and maybe the next week we will have already a bounce back. Who knows? It stays interesting as always. Let's have a look the last time on the market. And the S&P futures here are almost minus 2%, so it keeps on falling as of this morning. Let's see where it goes during the day. And for that, let us see, do we have also pre-market data of Tesla? No. Yeah, it stays interesting. The stock market is interesting, guys. So thank you very much for tuning in, and see you later on with Virgin Galactic Fridays. Take care and stay safe.